confusing. I think eventually it'll make more sense.
The what lettering?
The Greek.
Oh, the Greek. Yeah, the Greeks. Yeah, once you start trading, you'll understand it more. And
Okay.
it just becomes second, like
Okay.
second vocabulary that you pick up pretty quick.
Yeah. So I was
Um,
thinking like, oh, I wonder if I should begin just like mimicking what you're doing or having more understanding,
yeah,
start
yeah, I
doing.
would do that with the trade that I shared last week, the time
Uh-huh.
zone trade. I would
Uh-huh.
just try constructing that either here in Thinkorswim or construct it in Option Strat and just watch it,
Okay.
throughout the week
Okay.
and just pay attention to like what it's doing. Like,
Okay.
is it making profit? Are you losing money? And then if the market is, going against you, think about what kind of adjustments you could make. And if you know the adjustments, which I'll share with you,
Okay.
if market does this, then put on this adjustment. Um, then just try playing around with it, either an option strat or thinkorswim, and just put those pieces together and
Okay.
see what happens. Like in thinkorswim, you can go to the trade tab and analyze tab. Under analyze tab, you can go to add simulated trades.
Ah,
Let me put those up. If you go to simulated trades, you can add whatever strategy you want in here. You can make any trades you want in the options
okay.
chain, and you can monitor it. So let's say, like today, we're going to put on a trade, right? So maybe try to follow. Well, this is recorded, so you can try to put it on after, or you can try to put it on right now.
Okay.
And then um, go to 14 days out. This is the number.
Mm-hmm.
Also, another thing to check is if you go to the right of this 14-day expiration,
Mm-hmm.
see this number 22.84. That's the implied volatility number. So you want to kind of look at that. That's part of the strategy. Look at
Mm-hmm.
the implied volatility of the front cycle, which is this one, and then the back cycle will be 2 weeks after that, 35 days. And that's 23.8%. So what you want for this strategy is you want the front cycle implied volatility. Well, this is not what you want. You want this to be higher than the other one, but it's not doing that right now. Let me check um my option explorer, see what that's telling me. That's telling me 23%, 21%. Okay. So I think each broker and each software calculates it differently. My option net explorer is kind of opposite. The front cycle is higher than the back.
Mm.
So I would trust Option Explorer more because it's a paid
Okay.
service and
Oh,
they're pretty good at modeling things. So, and this is just Thinkorswim brokerage platform that they're mostly interested in trading and getting commissions, right? So I would trust Option Explorer more on this. So I would ignore that here. Maybe look at like Option Strat. I don't know if they have implied volatility there or not. I'd have to look. But anyways, let's put on this trade. With the add simulated trades, and then just go down here on the 14-day to expiration, and we'll scroll down. Oh, make sure you display all your strikes here,
mm-hmm.
and so you can see all the strikes. And then also, if you click on this thing, it'll tell you which columns you want to see in here, and
Mm-hmm.
you want to be able to see deltas. So look for one that says delta in it.
Mm-hmm.
Click on that, and I'll show you the deltas right here on the call
Mm-hmm.
side and the put side.
Mm-hmm.
So for this one, we want to go to delta 40. I don't know what those are. Okay, which is right there, 0.40,
Mm-hmm.
the closest to 40.
Mm-hmm.
Um, you want to put on a calendar at 40 delta. Um, So you would click on the bid here to sell
Mm-hmm.
the front cycle. You're going to sell it for 37.70, and then just minimize this and then go to the back cycle, which is the 35 days, and then sell that same strike of 28.40. We'll scroll down to 28.40. It'll be closer to at the money. This is at the money, which means the strike is currently the same price as what the underlying is trading at. So 28.40 is right there. You want to buy that one. So it's going to be more expensive than what you sell it for. So 67, you have to press down the control key and click on the buy part of it. And so add on to this. And right now, you're going to pay about $28 per contract, but there's 100x multipliers. So the total dollar amount will be $2,800 that you would spend on this calendar. So the minimum size for this strategy is two. So you have to do at least two contracts. And to do two contracts, you want to have a minimum of $10,000 in your account. So let's go. And before I place this trade, I should analyze it. What did I do? I just did the wrong button. Right click anywhere, then do analyze trade. Oh,
Mm-hmm.
sorry. I'm in the add simulated tab. So you got to go to um, risk profile because I added that simulated data trades, and then just go to the risk profile, and there's your calendar
Mm-hmm.
at 2840, yeah, 2840, which is right there. And then let's say this isn't the real trade, this is a simulated trade. Let's say, okay, what's a realistic price that you would get filled at? So you would lock it at, oh, okay, let's say lock it at a certain price. I could probably get filled at 28.40 because right now it's trading at 28.45, 28.30. It jumps around. So you try to kind of pick a middle price. You probably wouldn't get 28.30 or 28.20, but you could probably get filled at 28.40 or 28. Maybe you could get filled at 28.35
Mm-hmm.
because it's going down now. So, oh, and that's going up. So I would say roughly about 28.35 is a realistic price you would get filled at. So you just lock it at that price, and now that's locked in there. And then once you do that, then you can just watch it every day because you can come here and watch it. Just make sure you come here and do hide positions. You don't have any positions, but I would do that anyway. So it's good
Mm-hmm.
practice. And you can move this up and down. So you can, if you have more
Mm-hmm.
trades in there, you can see them, and then you can shrink this down or expand it. Then you can drag it left and right to center everything up. Um, and then the other part of the trade, you want to go to add simulated trades again, is go to the front cycle, which was the 14-day. Scroll up here. And then you want to go to the 14 delta this time. Um, which is this one, 14. I would go, this is closest, 13.98, 14. Okay. Then you want to sell, put credit spread. So you're going to sell the 14 delta and then go down 5, 10, 15, 20 and buy that strike. So press control, click on that. So now you're going to buy this for roughly $2. So you want $2. And I think I could get this filled at, oh, I could probably get filled at 210 because the higher the price, the better it is. If you want to sell high, buy low, sell high.
Mm-hmm.
So you're going to get a credit for this. You want the highest credit. So you could probably get filled at 210. And then once you have that, go to your risk profile and there's your trade for the week. And right now I have this slice set at unlock these and then $0. Actually, I just change that to percent. So this orange dash line is your 0% price point, and then up to I'll probably like do 2.5. Oops. well, I would do like 2.5% and then maybe negative 2.5%. So you get an idea of, you want the trade to be within these ranges. But
Okay.
anyways, and then I would come here. There's another thing here. Just change it to, instead of theoretical price, change it to mark price because that's the market price. Right now, it's telling me currently that the current market price, it's your profit loss will fluctuate because you have multiple legs here that prices are moving up and down. So it's calculating the combination of
Mhm.
everything. So that's your total P&L. It's going to jump around more than like if you did a single trade.
Okay.
So right now we're making money if we would have put that trade on. Well,
Okay.
maybe. uh, and then just
So you
watch it.
monitor it on the phone?
Yeah. So you can't. The mobile app doesn't allow you to see this risk profile. I
Uh-huh.
think I haven't tried it, but I think the Thinkorswim, the web version, you can
Mm-hmm.
see it there. But
Mm-hmm.
maybe try testing that out. Try go to the Thinkorswim web, not the brokerage account, but the Thinkorswim web
Okay.
page, and see if you can do it there. If
Okay.
not, what I do at work is I remote into my PC from my phone,
Oh,
and then I watch it there.
pretty small, no?
It's pretty good remote software where you can zoom in and out pretty easily, with your two
Okay.
fingers and
Okay.
move around. And I can show you, we'll have to, when we're back on site, I'll have to show you on my phone how I do it so you can see it.
Okay. Okay.
Um, and then like I mentioned last week, I have a stylus pen, makes it easier also to come in here and change things
Okay.
with the stylus pen to add adjustments and things. But I leave my home PC on, and then I just lock it. And then when I'm at work, I'll just log in. It's pretty quick, and I can check it real quick.
Okay.
Um, and it shows me I have four monitors, so it'll show me all four monitors, and I can just zoom in and out and move around between the different monitors. So
You
it's
have
pretty
four
simple.
monitors at home?
Yeah.
Do I need that many monitors?
No, I would say two. I would say at
Okay.
least two monitors.
Okay.
I have four just because I like to look at other things.
Okay.
That's me. But definitely two, so you can go back and forth between like option strat and your brokerage account and
Okay.
charting if you want to look at charts. Because
Okay.
like I have on one monitor I have this. I look at the charts. This is what the rut is doing today. It gapped up. This is a 5 minute chart. So today started here. Yesterday it closed here.
Mm-hmm.
Uh, so it gapped up overnight, and it's now going up. Now it's coming down. So I hate that because you want to just go stay flat, but that's never the case. But our strategy is pretty good. Does a that can handle a large range of movement. But like yesterday, it started here, but then it just went up the whole time, right? So if it does this, then it's going to require an adjustment. Um, or if it does, like let's say you put on a trade here and it just went down all day, and then the next day it even went down further, gap down. So in this case, you're gonna have to put on an adjustment as well. So, but that's
So
okay because
adjustment means like you would sell or buy some of the previous options,
um,
or how, what does that mean?
yeah, I'll show you here in a minute.
Or we
It's
can do it
basically
on site when you do too.
yeah. So it's basically recentering the deltas, like I mentioned last week. So if you look at here, the deltas at point 0.6 at the current $0 slice, right? So you want that to be zero. So this
Okay.
pink line is your delta line, your
Okay.
price line, profit loss line. So when a slope of delta is zero, that's you get a very flat delta across a large range, right? So
Mm-hmm.
you're trying to keep that flat delta at where the current market price is. So if the market goes down to here, well, now your delta is sloped positive, and you're going to have a large positive delta, like like it'll show here. So at this slice, your delta will go to 18. So so you want to recenter that to back to zero. So you basically moving this delta over to here. And to do that, you have to make an adjustment. And to do the adjustment, you probably have to put on a either a put debit spread here to raise this tent up a little bit. So this raises this. So that's one good thing about this delta neutral strategy is you don't care about which way the market goes,
Mhm.
because you should be able to make money either if it goes up or down because you have the ability to adjust this. But of course, if it goes too far, too fast, either direction, then you're gonna lose money. Or if it just continues like day after day after day, just keeps going up and up and up, then you're gonna run out of adjustments and you just have to take a loss.
Okay.
So let me pull in my trading plan on this. So,
How did you do last week?
I lost on it. Unfortunately, I had to make an adjustment. I'll make a video on it because I don't think we
Okay.
have time today, but I'll make a video on it, send it out. And I made three adjustments and I made the adjustments go down, and which was fine. And then it continued. It once after it went down, it basically bounced back up again. So, like I said, that's the worst thing. So that happened to me twice, two times, in last 2 weeks. So just unlucky right now. The market, the way it's how it's going. That's all
Okay.
right. But this is a 80% win rate strategy. So you're going to lose 20% of the time, roughly. So if you do 100 trades, you're going to lose 20 trades, right? So you just have to be comfortable with that, which I am, because I know over the long term, this is going to make
Like
money.
money. Yeah.
Because I can show you my track record so far on this. I haven't been trading it like all of the time, just off and on.
Mm-hmm.
Um, let's see if I can pull it up here. I don't know if it'll let me.
What was the previous strategy that you did?
That was the time fly spread that
Right.
Simon.
Okay.
Did you watch that video by Simon?
Not yet.
Oh, okay. Watch that. He's good. It's pretty good.
Okay.
I just didn't want to. I like this other one just because it has more range, even
Okay.
though you do more adjustments than the other one. The flagonal, not the flagonal. There's another guy that came up with the same thing. He calls it the flagonal, and Simon calls it the time flies.
Okay.
Um, but the time flies has got a narrower range, so I'm just gonna go back to this one for right now,
Okay.
until the IV goes higher, because I want a higher IV to trade the time flies. Let me see if I can find the. Oh, that's not right. Oh, that's weird. Let me see. I'm trying to find my report here. Oh, I see. Oh, I should know it that way. I should do it this way. Taking longer than I thought. Okay, so
Oh.
like I said, I haven't been trading it every week or anything, but it looks like I started around end of last year.
Mm-hmm.
So, sometimes you break even, sometimes you make money, sometimes you lose here, like I lost a little there.
Mm-hmm.
And this whole period here was really good.
Mm-hmm.
And this last week I lost this. So, but I know this is temporary and it'll continue going up, even if I, lose 20% of the time. So,
Hmm. That's pretty good.
yeah, yeah. I like the track record. So I do like this strategy. So,
Yeah, okay.
and then let me show you the trading plan real quick. I don't know. I think we have 10 more minutes. Let me see. How much time we got? Does it
What is that
say?
timer in the corner? It says we have 13 seconds. 12, 10.
Really?
Yes.
I don't see the timer. That's weird. It's not showing me.
Okay.
Do you see it here?
It's
Do you
like
see
a
this?
hour clock on the Zoom meeting.
Oh, really?
Yeah.
I think that's the calendar part of it. When I put it in the schedule of a Google Calendar, what the Zoom I think is a little bit longer.
Oh, okay. Cool.
Zoom
Thank
is
you.
like 40 minutes, and then in the schedule calendar on Google, I put
Okay.
30 minutes.
That makes sense.
Yeah. So this is the trading plan. Um, so like I usually take a snapshot of my current trade when I first put
Hmm.
it on,
Hmm.
so I know. Let me zoom back in. So this was last week's trade I put on. Um, so I know roughly because up between the current price and the break even line here,
Hmm.
I want to go halfway in between, and I want to say at that price level, if the market goes up to that price level, then I have to make an adjustment to the upside. And then I have another point where this is the short strike, the 40 delta one. If the price goes down to this short strike level, then I have to make a downside adjustment. So that's part of the strategy. And then there's a few ways to adjust the upside and to the downside. And these are the rules. For two contracts, you need a minimum of 7 to 10K in your account. Your profit target is 5%. So when this goes to 5% here, or
Hmm.
in Thinkorswim, it'll give you a percentage, um, your profit loss percentage here. If it goes to 5%, you take it off. Um, because that's your profit target. And I think for two contracts, you can make like $400, I think, for
Okay.
5%. Um, and then these are the rules: your implied volatility, front cycle, back cycle. I went over. Um, and then these are the front cycle, the DTs, days expiration, 7 day expiration, and 35 days are the ones that I use.
Okay.
And then I usually enter these on Friday mornings, or you can do it later on Thursdays. And then like this is the delta, 40 delta, 14 delta. You want a
Okay.
minimum of $2 for the put credit spread that we put on. And then I just mark the prices here. I just
Okay.
calculate them and just roughly round it up. Like this will be because you want to go in 5 point increments. So it'll be 20. This will be 2,800, and this will be 2,755 at the money, upper break even, mid price.
Hmm.
So if it hits any of these, not at the money, but the upper break even or the mid price, I got that right? No. Oh, okay. This is the mid price and the upper break even. So if it hits the mid price, which is here, this is the upper break even. This if it hits this, then I have to make a downside adjustment. If it hits the short strike, which we already know what the short strike is, because we'll put on the trade. I didn't put it here, but you can put it here too, and then make a downside adjustment.
Okay.
Um, and then these are the adjustments. So I can either make a video on this or we can go over it some other time.
Okay.
But like the blue is your current trade, the green is your model new trade that you're making adjustment with.
Hmm.
So like this is taking the back cycle, you're taking half of that one, so it's subtracting one from the two that you already have, and you're gonna move it to the front cycle. So you're gonna this they call it a reverse diagonal. This is the inventor that she came up with. So what this does is it basically lifts up this tent to the right side more. So it gives you more room to the right side. See the green
Mm-hmm.
tent is further to the right and versus your current trade. And it kind of flattens out this delta. So your delta went from -5, which was sloping down pretty good, -6, then you flattened it out to 0.2 delta. And you still kept your theta. I mean, you want higher theta, but it'll decrease your theta because you made this adjustment. It'll decrease your theta. So that's fine. That's what happens when you make an adjustment. So it's going to take longer to reach your profit target. And then if the market continues to go up, then you make this second adjustment. So you just roll the back cycle one down. So you're just basically moving your position. You're selling that out and buying it down lower at a lower price.
Oh, I
That's
see what it's doing.
yeah. So now it's bringing this even out further. The
Mm-hmm.
market continues to go. Let's say it was here, now it's down to here. Then you want to make the second adjustment. And then if it continues to go up, which a lot of times these markets can just go up and up and up forever, right?
Mm-hmm.
You go to the front cycle and you just put on this call on the call side. This is not the puts anymore. You buy a call debit spread, which is a bullish strategy, and you just do it by 10 wide, close to at the money, right above at the money, which is this 29.65. Do it at 29.70. Just add this, and it brings up this structure more. So now it flattens out your delta even more. So your delta went from -7 to almost zero, and you still have theta, which is good. You want positive theta. If the if you do adjustment, it shows a negative theta, then it's time to close the trade.
Okay.
Um, and then for the downside adjustment, oh, I'm running out of time. How much time do I have?
We have been on for 32 minutes.
Okay,
Do
I
we
got
have 7 minutes?
seven minutes left.
Yeah.
So in downside adjustment, so I'll send you this slide.
Okay.
Um, Basically taking half of your negative short position, like here, and you're moving half of those
Okay.
down to here. So it changes your tent to this green. It basically flattens it
Okay.
out more, so you have more room to the downside. So that's pretty. So it went from 7 to 1. And then on if it continues, oh, this is a different thing. So a lot of times you put this on and the market bounces because that's I don't know. I guess that's the nature of the market. It likes
Mm-hmm.
to like fake people out. So it'll drop really hard and it'll make you do an adjustment or sell your positions and then it'll bounce back. So it does that a lot. So a lot of times if you think that's going to happen, you do this downside adjustment and then you put on this upside adjustment at the same time by buying a call debit spread to put this little thing on here. So in case it bounces, you have room to the upside as well. So it's like a combination type trade. You put on this and this, downside and upside adjustment at the same time. But I usually don't do this upside adjustment unless I really think it's going to bounce. But it's up to you.
Okay.
And then there's other things you can do, like a little tweaks that I call it. If you want to like give more, a little bit more room to the upside, not just, these are like small adjustments. If you wanted to, if you thought the market was going to go up, and this is another downside tweak. You could take the back cycle and move half of your position, or actually roll. They call it roll your strike up. So you're taking this, closing it out, and buying it up here at a higher price, and that gives you more room in the green here to the downside. So, and then I have the exit rules down here. Um, think okay, you never want to stay in it in the net last week of expiration. So this is the front cycle is 14 days to expiration. So after 7 days, you're in the trade, you get out no matter what. Max loss, if you hit 5%, you just get out. That's what happened last week for me. I hit this max loss 5%,
Mm-hmm.
so I just took it off. Even with my adjustments, it hit max loss. And then if the chart, basically the plot doesn't look good at any time, just get out. If you feel uncomfortable, just get out. It's not good to just stay in it and lose more because this can go south really quick.
Mm-hmm.
If your plot doesn't look good and market goes against you, you could lose a lot of money. You go 14, 27% down, that's a lot, right?
Mm-hmm.
So max loss you should go away with is 5%. And your max profit should be 5%. I mean, you can go for more. I think some people go for like 10%, but I'm pretty conservative. So I just go take my profit and run.
Yeah, I think that
And
makes sense.
yeah,
'Cause- yeah.
and that's it. And I'm going to put on a trade once we get off here.
Okay.
But I would recommend just, going in here, putting this trade on,
Okay.
Thinkorswim or an option strat, and just watch it during the week.
Okay.
And we can meet at work um, and go over how I remote into my PC. So you can do it. It's called it's Chrome Remote Desktop, which is
Okay.
good software. Do you use Android or iPhone?
iPhone.
Oh, okay. iPhone's a little bit. I have an iPhone, and because of Apple and Google, they don't like to play nice with each other.
Yes.
So it's not the greatest. Because Google Remote Chrome Remote Desktop is not the greatest on iPhone, but it still works well enough. Because I noticed on my tablet I have Android and it works so much better there. But I don't want to carry around my tablet, so I just use my iPhone and deal with the different companies. Their conflicts with each other. It's so stupid, anyways.
Okay.
Because Apple wants money to put their app on their app store. I don't know if you know the whole
Yes.
story, but so so Google has a workaround, so they don't want to pay Apple to put it on their app store, and so it's a mess.
Yeah. Okay.
But I'll show you that, and then if this, so I'll keep this here too
Okay.
in my simulated trade so we can watch it, but I'll have a real trade on as well.
Okay.
But and then we forgot we gotta export current trades. Just save that so that you don't ever lose it. Just
Okay.
call it. I just know. I'll
Oh, so you
do
can use, oh, okay, okay. I see what
I'll
you
do
say.
simulated TZ and I'll put the date maybe May 26. I know which one it is. And then if you happen to like lose it for some reason, you can just import it.
Okay.
And there you go. And make sure you type in RUT here first. So you
Okay.
run the right symbol.
Okay.
Um, and then hopefully we don't have to make an adjustment. This will stay right here and this data will basically lift up and make us a profit of $400, hopefully. All right. Any
All
questions?
right. No questions yet. Just let
Oh,
me know when you
okay.
go to lunch on Monday or
Okay,
Tuesday.
sure. Yeah,
Cool.
let's do it. Oh, let's see. Is there anything going on Monday? I don't think so.
Okay. Thank you.
Oh,
Yeah.
oh, actually, Monday's a holiday.
Oh, Tuesday then.
Yeah, yeah, Tuesday. And then,
Okay. I'll see you then.
okay, see you later. Have fun.
Young.
Okay, bye.